If you want to reduce your tax on your jointly owned buy-to-let property by transferring ownership to the lower taxpayer spouse, you can legally minimize and maximize your rental income. Let's explore this simple strategy. My name is Gagananand from One-to-One Accountants, and my mission is to empower individuals and businesses with knowledge and service to help them achieve their financial goals. Welcome to this video. If you own a buy-to-let property with your spouse, did you know that restructuring ownership could help you reduce your tax liability? In this video, we'll explore a tax saving strategies that involves transferring property ownership to the lower taxpayer spouse by following the right steps. You can ensure your rental income is taxed more efficiently. Let's get started. Many property owning couples in the UK automatically splits their rental income 50-50. However, if one spouse is in a lower tax bracket, this might be a more tax efficient step. By shifting ownership, you can legally reduce the total tax paid on the rental income and keep more of your hard-earned money. Let's break down the benefits. If one spouse is a basic taxpayer, say 20%, and the other is in the higher 40% or an additional rate 45%, transferring ownership means rental income is taxed at the lower rate. This not only increases your take-home earning but also improves long-term tax efficiency. To benefit from this tax saving strategy, follow these 4 key steps. You must change ownership from joint tenant to tenants in common. Document the new ownership structure through declaration of trust. File the necessary paperwork, including Form 17, and notify HMRC within 60 days. Step 1. If you and your spouse currently own your property as a joint tenant, your ownership is automatically split equally. To change this and allocate a different share, you must convert into tenancy in common. This gives flexibility in ownership proportions, such as 90-10 split. To do this, submit Form SEV to HM Land Registry, or you can also appoint a solicitor to do that. Step number 2, once ownership is changed, you need to create a declaration of trust. This legally binding document outlines the exact percentage of the property each spouse owns. More importantly, it ensures rental income is allocated accordingly. Without this document, HMRC will not accept your request to change the income distribution. Step number 3, Form 17. This is a very crucial form. It notifies HMRC that you wish to have rental income tax based on the actual ownership percentages. Without this, HMRC will continue taxing you 50-50, even if you have changed ownership. Make sure to submit Form 17 within 60 days of signing the declaration of trust. That 60 days are very important days, so make sure you don't miss that timeline. And the last step is submit the completed Form 17 and your declaration of trust to HMRC. This step ensures that new income split is recognized for tax purposes. Again, remember, the submission must be done within 60 days. Understand the difference between joint tenancy and tenancy in common is a key factor. Joint tenant shares equal ownership, and upon death of one spouse, the property automatically transfers to the surviving spouse. But on the other hand, tenancy in common, as you wish, such as 90-01 split. This is required for Form 17. So for Form 17 to be submitted, you need to have a tenancy in common in place. Form 17 can only be used by married couples or civil partners who owns a property as tenants in common and have a valid declaration of trust that specifies ownership share. If you meet these conditions, you can allocate rental income accordingly and benefits from tax savings. Who cannot use Form 17? If you are not married or in civil partnership, or if your property is owned jointly under joint tenancy, you cannot use Form 17. Additionally, if your property is owned through a limited company, this strategy won't apply either. Key consideration is, before making changes, consider tax implications. If there's an outstanding mortgage, stamp duty tax may apply. Please discuss with the solicitor for this change. However, transfer between spouse and are exempt from capital gain tax, making this a tax efficient move. Remember, HMRC does not allow retrospective tax change. Income will be taxed under the new structure only from the date of submission of the Form 17. In summary, transferring ownership to a jointly held buy-to-let property to a lower taxpayer spouse can significantly reduce tax liability. By restructuring ownership, submitting Form 17 on time, and following the legal requirements, you can optimize your rental income tax strategy. Always consult with a tax professional to ensure full compliance. Are you ready to make your buy-to-let property tax efficient? Review your ownership structure, speak with a tax advisor, and take action today. By making these right financial moves now, you can maximize your rental income and reduce your tax burden. Thanks for watching, and please subscribe to my YouTube channel for more informative videos like this. Thank you for watching.